Hello traders, today is the 21st of January. My name is Dr. Hornsey, market actually trading, and today I'll be looking at the daily 200 period moving averages. Okay, for people that follow me along on YouTrading.com, you'll notice that I have a 20, the 50, and the 200 period moving average on my charts generally. The 20 and 50 are kind of a momentum sort of indicator. If the 20 above the 50, then I'm looking for prices to go higher a little bit quicker. And generally, if prices are above the 200 period moving average, then I'm looking for longs only. And if it's below the 200, I'm looking for shorts only. I think that's the same for most analysts and traders across the world. So everybody's kind of looking at the daily and the weekly 200 period moving average for their sort of longer term trading ideas. Now, I like to blend fundamental sentiment and technical analysis all together. And at the moment, we're in earnings season, so fundamentals are kind of important. Bloomberg wrote that Netflix expects to add just 2.5 million subscribers this quarter, which is below market estimates. And it would be the slowest start for the year for the Netflix in the last 10 years. So obviously, they've just come off the back of the pandemic coronavirus lockdowns, where they would have brought forward millions of subscribers and obviously generated a lot of revenue. For now that coronavirus is kind of around, but people are going back to work, there's less opportunity and less new subscribers to come. So it's going to be hard for Netflix to maintain that revenue growth, unless, of course, they come up with something market disrupting. In the after hours trading, the Netflix share actually dropped by 20%. So it dropped from 508, which was the close in regular trading hours, all the way down to $404.50. So there's going to be a big gap down today. Gaps generally get filled. So depending on where they are trading right now in the after hours trading, depends on how big that gap is and how much of a gap play we could get. Generally, I think the consensus is that the world's in a pretty shaky place at the moment. And like I said yesterday, the S&P 500, I believe, is likely to come lower in the sort of next year because of less money floating around in the system. So Netflix fundamentals bad. Obviously, they are part of the S&P 500 and the NASDAQ. And if you look here, you can see that Netflix within the S&P 500 sort of sits within the sort of technology services sector. And as a market weighting, they're number 30 in the list, just below Walt Disney here at 20. So yesterday I said about the S&P 500 looking bearish, and a warning would be if we get below this 4,500 and this swing low here from December 2021. That obviously happened, but you can see that we're still trading above the daily 200 period moving average, and we are essentially at the swing high of this market structure from the 6th of October 2021. So market structure over here is bullish, old resistance acting as support. Now we need to sort of test this old support, see if it becomes resistance. If it is resistance, then the 200 period moving average is not only a trend indicator, it suddenly becomes dynamic support. And if we can get through that 200 period moving average, then it's obviously more bearish. If it's acting as support, then we're looking for some serious value buyers come in and taking the price to all-time highs. Now, if they do that, I just want to sort of go back to days gone by when the DAX was at an all-time high, but prior to the coronavirus. So it's a similar sort of chart to what we're seeing now in the S&P 500. We've just taken out a swing low from previous market structure. The price was above the 200 period moving average at the beginning to late January of 2020. And you can see that, we didn't come down and test the 200 period moving average on the DAX. Buyers just swept the lows and then took it to new all-time highs. Then obviously, fundamentals completely changed around the globe, and we had a big market crash. It took out the market structure again, but more importantly, we also closed below this daily 200 period moving average, and that was the signal for everyone else who was bearish to jump on board, sell out all of their sort of long positions, and start looking for lower prices. Now, generally, what you do is you look to the left and you look for market structure as resistance to act as support. So, this level here, people would have been tempted to take profits there, not thinking that it's going to take out this swing low. Obviously, that worked for half a day maybe, but then we started limit down gapping all the way, as you see, to new lows, taking out the swing lows here. So the liquidity starts, this is where people keep their stops. So then that sort of sees the acceleration lower. So when you get below the 200 period moving average, you're starting to look to sort of sell the rips and not buy the dips. Going back to the US 500, now clearly we haven't taken out this 200 period moving average. We are looking at market structure to the left. If we were to get below the 200 period moving average on this daily, there is still the possibility that the 50 period moving average here on the weekly chart acts as support, and the 200 period moving average on the weekly chart is all the way down here at 3,500 and above this swing high here. So currently on a weekly, we're obviously in a very large uptrend, still very bullish. The next real key support and market structure to sort of remove for the bears to really get excited is around the 4,280. We go back to the daily chart. If we were to take out that swing low here, so that's a weekly market structure, we'd be below the 200 period moving average. And I think if these were bulls and they were taking profits at this point in time, the bears would definitely step in at below 4,300. Assuming that we do get some dynamic support here and we get to do what the DAX did. If I just go back to the DAX chart, we took out market structure, still above the 200, made a new all-time high. So, that is a possibility. So we have to bear that in mind. Don't really sort of see how we get to make a new all-time high anytime soon. I'm thinking that we're more likely to, if we do get a bullish response over the next week or so, is that we come up and start testing these green candles here. So 4,660 to 4,700 to me would be, yes, a logical target to the upside, but I don't foresee how we get to a new all-time high. But obviously, while we're above the 200 period moving average, anything is possible. So just bear in mind that we could get some sort of bounce up to this liquidity area up here. But today, be looking to sort of see if we get back below the 200 period moving average. And, it's Friday, so anything can happen. If you have made money this week, probably best to hold on to it and then come back and reassess next Monday. All right, hope that makes sense. And I'll speak to you again next week.